A sharp recovery in financials helped Dalal Street close with healthy gains on Friday. For the week, the Nifty and the Sensex regained half of last week's losses. Banks outperformed. The index saw 3%, which is the biggest weekly gain in a month. In this week's edition of Editors Roundtable, we'll focus on the Adani rout, what it means for ACC Ambuja. We put the spotlight on IT stocks. We look at the stocks which had the biggest impact from the budget. I'm Reema Tendulkar. With me are Anuj, Prashant, Nimesh, Nigel, and we've also got our guest editor, Basant Maheshwari, author, portfolio manager of Basant Maheshwari Wealth Advisors. Hi guys. Longest week, right?
I don't know about you guys, I'm looking forward to the weekend. In the morning I was joking that, Monday was my 43rd birthday and by today I'm feeling 45. It's been that long a week.
Budget weeks are also, invariably very long, but this one was extremely tiring and exhausting, right? With Adani, FOMC, earnings.
I think Adani just took over everything. I mean, nobody spoke about budget also to a larger extent, right? I mean, it was all about Adani from Monday to Friday. Every day, some of the other news, stocks falling. It was like all over the place. So it's actually dominated the mind space of every investor this week.
We got the TGIF rally, right?
We got the TGIF rally, and actually, I just want to quickly put up a couple of things before we move any further. So I think Friday was the first day, really, when the market got out under from this Adani story, right? And it looks like it perhaps is, it's looking better. It's looking much better out of the ICU, perhaps into the general ward, and maybe out of the hospital very soon as well. And I think this is good. And this is something that we've been saying for a while, that the broader impact of the impact of the broader market of the Adani story perhaps should diminish over a period of time, and I think that process has already started, as we saw on Friday. Amidst all of this, what has happened is the global market is looking much better, right? I mean, the Nasdaq particularly is up 16% on a year-to-date basis. And what is the market they're pricing? It's pricing in no recession, and it's pricing in that the Fed will be, dovish, pivot, whatever, right? So it's almost like a Goldilocks kind of situation. Although I think it's not that the thesis has not been put to test. Today we will get the jobs data, and I think market will digest that, and I think that thesis will be put to test when we come back on Monday. It could turn out to be both ways. I mean, the market could be smacked if the jobs number is very hot, and everybody starts worrying about the fact that the labor market, which is the number one thing the Fed watches, is still very, very tight. So it's an important one. FIIs have been selling, and we've heard this over and over again, that FIIs are selling expensive markets and they're buying cheap markets, the reverse of what has happened. But I just want to put out one data point. The Chinese market is now up 60% from the October lows. It's now not trading at 11, 12 times. It's trading at 18 times one-year forward earnings, which by its own historical average and by other yardsticks is not cheap at all. So I think at some point there will be a reversal of the reversal, which is, you kind of go back to what foreign investors have done, which is buying the high quality markets like India and a couple of others as well. The only problem has been corporate earnings, which I think have seen more downgrades as compared to upgrades. And this is true for consumer sector, but so many others. It started right from the word go, and it's continued all through the earnings season. Just two levels on the Nifty. We're very close to the 20-day, which is now at 17,896, with I think 150 points away. On the Bank Nifty also, we're almost there, some 400 points. 41,821 is the 20-day for the Bank Nifty. So you cross those near-term kind of moving average levels, and then you look up ahead. And hopefully, as I said, the broader market impact diminishes, even as that issue, I don't think is going to fade away very soon. It'll continue to fester in some way or the other. You'll keep getting headlines, but the market hopefully moves on.
Okay, let's take stock then of what the dealing rooms, what the stock market participants were up to this week, Nimesh.
It was a very tough week for not only for the investors but even for the traders. The way the stocks have corrected 40, 50, 60% of the Adani Group stocks, and actually it's cleaned out a lot of traders, so to speak. The big theme of FI selling continues, as even Prashant pointed out. Money is moving out of India. That's been a big theme. Earnings have been quite mixed so far, so there is not big earnings support as well. I guess next week there is the RBI policy that's going to have a center stage, and the fact that a lot of the Adani Group's companies are going to report earnings, right? So it will be like everybody's going to look at with a microscope as to what they report, cash flows, cash numbers, and everything. So I think that's going to dominate next week as well. But the bigger theme is the money keeps going out of India from the larger FIs.
Absolutely, and I think as Nimesh said, next week is very important because we have the RBI policy, and especially after the budget, Also, like Prashant mentioned, by the end of this week, you could sense that the market was willing to move on, ex of Adani. I mean, the Adani impact intraday was not having as much an impact on the market. In fact, the Bank Nifty for last 2 days really gave you a comforting close. On Friday, in fact, the Bank Nifty was up 800 points, and my sense is maybe another 1,000 points left over there. But we have Basant Maheshwari joining us now in our studio. Basant, good evening. I, of course, had a chance to interact with you earlier this week as well. But what did you make of this entire Adani saga? Because that clearly was the big story. Unfortunately, the budget became a sideshow.
I think, Anuj, the market has become a story of two halves, as they say. So it's the Adani and it's the ex-Adani stocks, as you might say. Because if anyone would have said that one Adani enterprise is going to fall 75% within a matter of weeks or months, we would have said market aadha ho jayega. Because we've been born and brought up with the concept that when a poster boy of a bull market comes down, it takes down everyone with itself. But I think the market has moved on. It's a much bigger market now than what it was 20 years back. There is lesser dominance by a few players. The market has been widespread. So I think we are just waiting for this Adani stock to settle. Whatever price it settles, 3 digits, 4 digits, 5 digits, that's anyone's guess. But once it settles, then only the entire market will move up with the global market. Like, as I say, you can't have a birthday party at home when the house is burning.
Yeah.
All right, but this was also the budget week, so I just want to quickly recap the big themes from the budget and the stock impact. One of them was ITC. Well, the budget after 3 years gave you a hike on cigarettes, but the hike was not as much as what the street was anticipating. ITC went and hit a record high. 10% gain for this week. ITC was the top nifty gainer this week. For the year, it's up 15%, and this is over and above the 54% rally that it had last year. Brokerages, 36 brokerages, I was looking at Bloomberg, 36 brokerages track ITC. 34 of them have a buy call on ITC. Nomura, post the budget, upgraded the stock, and they said this is a pragmatic tax regime which will give sustainability and predictability when it comes to cigarette volumes. The second big theme was the infrastructure and the capex. We all expected that the budget is going to be big on capex, but the capex number of 10 lakh crore came in ahead of street expectations. The favored budget capex play was Ultratech Cement, and in a way it was also because competition, the sentiment and competition was hit, and people are now anticipating that perhaps the competition, ACC and Ambuja, is going to be a little less aggressive going ahead, which should favor Ultratech Cement. And the third one, and that's on the way down, was HDFC Life, right? If you strip out Adani Enterprises, HDFC Life was the biggest weekly loser. It was down close to about 17%. The intent of the government is very clear. They want to close all the loopholes. Wherever there is a savings product was giving you tax arbitrage, the street fears that there is going to be more to come, and therefore if growth rates for insurance companies is going to be hit, then perhaps the valuations also need to come down. So, these were the three big stocks. ITC up 10% this week. After that, it was Ultratech Cement, 7% gain for the week. And on the way down, HDFC Life was down close to about 17%. But, Basant, we'll come to you. But I just want to quickly get Nigel in. Since we spoke about Ultratech Cement, right, everyone's watching ACC and Ambuja now.
Well, that's right. The big question is, have ACC and Ambuja Cements come to a value zone? And we'll know that, I think, in the next couple of weeks or so. Remember when Adani took over ACC Ambuja, everyone was talking about this re-rating or the Adani premium that you're looking at. That seems to be done away, and now suddenly there is a bit of a buzzer. Is there a discount that is called for? So we'll find that out as well. Let's run you through what's gone on first. In 2023 so far, or just in the last week, or from the recent highs, both the stocks have corrected considerably. And now both of them are trading at a sharp discount in comparison to what the open offer price was. Remember, ACC, the open offer price was around 2,300. For Ambuja Cements, it was around 385 odd. What works for them first? Let's focus on that. For ACC, it's trading at around $85 per ton. It's a large size company. 35 million tons is what it has. So it's trading at its cheapest valuations we've seen in the last 15 years or so. I wasn't tracking it 15 years back, but yeah, that's the rough average out there. And also on an EV upon EBITDA, it's trading at around 9 times odd, which is rather cheap. And as of now, the street is factoring in no improvement in volumes, no improvement in EBITDA per ton at current reckoning. For Ambuja Cements, well, it's trading at a little bit of a premium in comparison to what it trades at on an EV upon EBITDA basis, but it has limestone reserves, and the street believes that they can add close to 20 million tons. Forget about inorganic growth. Organic growth itself, they can go ahead and add big time. And also from the time the Adani Group has taken over, you're building in cost savings. Whether it is the savings on the royalty, remember earlier ACC and Ambuja used to pay a royalty to wholesale, so that's around 50 rupees. Then you're talking about economies of scale because they have been laggards in terms of market size and capturing market as well. So volumes are like to pick up. WHRS, which Shree Cement, they were pioneers in that. Suddenly ACC and Ambuja adding capacity, that will save close to around 100 rupees per ton moving ahead as well. So give and take everything, it's close to around 300 rupees. And the other one is some kind of synergy benefits from the group companies, which now suddenly that is being looked at as a bit of a negative. Let's get to what works out for, what is the street a little bit cautious or skittish on. For Ambuja Cements, there was a 20,000 crore promoter infusion. They put in 5,000 crores. The street is questioning whether they'll put in the remaining money at around 420 rupees odd. That's around 15,000 crores spending. Point number one. Point number two is the change in working capital from the reported numbers of ACC. Suddenly the working capital expanded by close to 2,500 crores odd. Out of that, 1,200 crores is the advance that they paid to, for procuring coal. The street suddenly is a little bit cautious from where have they procured it, why are they paying in advance for coal. So both those two are making the street a little bit skittish. But otherwise, the margin of safety is there because both of them, they throw up a lot of cash flows. Combined, the entity throws up close to around 5,000 crores of cash every year. And also they're sitting on cash balance of close to around 10,000 crores approximately. So that's what makes both these two assets, the street is looking at it and believes that there is value at some point of time. But before we get Basant's view, let's hear out what the finance minister had to say on this entire Adani saga that's playing out.
The opposition is taking aim at your government, saying that the banking and insurance companies have large exposure in Adani stocks, and the investors and the broader market is looking to you for some direction on this issue. Is our banking and insurance system resilient to take this shock?
I want to recall the words, coming from the horse's mouth has greater credibility. Both SBI and LIC have issued detailed statements. And I know the chairperson or the CMD has himself come out and explained how they are not overexposed or whatever they said.
Yes.
And also said, look, we are sitting over profits for the exposure that we have, which is well within the limit. That's what I understand they have said, and I've again read it through the media. India remains as before an absolutely well-governed, stable government and also very well, regulated financial market.
All right, Basant, I want to ask you, what's your view on ACC and Ambuja Cements? The re-rating, was it called for in the first place? Did they buy it at a very expensive valuation? How do you approach both these two names? And if not them, then from the cement pack, what do you like?
See, fundamentally, if Adani as a group doesn't get money, then everything comes to a crunching halt. And I'm not making a forward-looking statement. What I'm trying to suggest is, what do the promoters get out of Ambuja? Dividends. That is after 1 year. But the debt that they've taken to service the buyout will have to be paid in interest and installments every time. So the first question is, does Ambuja and ACC go to 150, 140 million capacity over 5 years as they've envisaged? Because you need money for that.
Yeah.
And when the parent can't raise money, the first question the market would like to know is, how do they get the money for all this capex? So had they gone ahead with the FPO, I would have said it's a steal at say 350, 360, 370. But because the FPO hasn't happened and because there's so much of discussion happening around whether they can raise money again or not raise money, I would look at these stocks, anything related to these promoters, only after they can raise the money, not before.
Okay, that's interesting. So let's see whether the stocks have bottomed out or not. Interesting thing, ACC is now below replacement cost, so will be interesting to see what happens from here. The sector I'm focusing on is IT, and this is a follow-up to what I did a few months back on whether IT stocks have bottomed out. And if you look at what's happening, there's nice symmetry playing out between the Indian IT stocks and NASDAQ. In fact, from the lows, the Nifty IT is now up 16%, and Nifty IT is up a good 21%. That's in a matter of last 3 or 4 months. But if you look at how much more distance they need to travel to get back to their previous highs, that's almost same for both Nifty IT and NASDAQ. That's 17%, which also means that the IT index is exactly in the halfway point. It's recovered exact 50% of the overall losses. Now, if you apply the simple technical analysis, you have 33% stop, then a 50% stop, and then a 66% retracement. So 66% retracement comes in at 33,200 thereabout on the Nifty IT versus current level of 30,500, 31,000 thereabout. But in terms of individual stocks, what's interesting is that the big rally has been led mainly on the Nasdaq by 3 or 4 stocks. Meta, for example, is up 110% from its recent lows. Tesla is up about 85%, and you have Amazon, which is up 50%. Others have also done well, but still not as much. 23% for Microsoft, 21% for Apple, and for Alphabet is 29%. In India, the IT rally has been more broad-based. If you look at the individual stocks, more or less, almost all of them have had a decent rally. HCL Tech has led it with 30% move. TCS with 19% and Infosys with about 18%. In the mid-cap IT though, it's really Persistent and Coforge, the two highest beta stocks which have done the best. Persistent is up 56%, Coforge is up 35%, and both have come out with really good set of numbers. And First Source ahead of numbers is making a bit of a move, and LTI Mindtree after that strong commentary. Now what's changed is almost something which we had earlier also said, that this is how perhaps the stocks do bottom out. If the Fed gives an indication that perhaps interest rates have peaked out, and in that case the valuation reset which was on, that gets stopped. And on the other hand, if you see some kind of return in top line and margin, which is something which some companies have shown, but still you would need to see next quarter. And of course, as Prashant mentioned earlier, we still need to see whether we have reached terminal rate or not, and that we'll still need to watch out for the US data. And lastly, the big joker in the pack is if the US goes through a recession, because if that is the case, then all bets are off. But Basant, what's your view on the IT stocks? You reckon that the worst is over, and could these stocks be outperformer, or would they be at best market performers from here?
No, I think they would perform well, but you can't compare Indian IT companies with Meta, because Meta also falls 90%, 80%. So these guys didn't fall 80, 90%, they fell 50, 60%.
Yeah.
So I think a right comparison would be Microsoft, as you suggested, or maybe an Apple, which didn't fall so much. I'm not suggesting you can compare these two companies, but in terms of price, if you want to look at it. But broadly, if you see, the globe's problem from a stock market's perspective were A, Nasdaq, and B, Tesla. These were the two stocks that were all over the newspapers, and they were the two who were just falling down. So the problem was never with a Walmart so much as it was with a Tesla or a Meta. So when your problem areas are leading the market up, it means that you are behind the problem. Otherwise, had Dow been outperforming Nasdaq last week, I would have said the problem for the globe still remains. But the Nasdaq is outperforming Dow for the last 10 days. Yeah. So that makes me think that probably we are nearing it, because Nasdaq is more related to interest rates than the Dow. Exactly. So I think the Fed also, the first time, I mean, you will have economists and you will have commentators and people like you figuring out how many times he's used a particular word in this speech and how many times he's used it in the previous speech. So we can't keep count of that, but even if you look at that, the number of times he's used certain words, I don't know what those words were, is more this time than it was.
Disinflation, right?
Disinflation, right. So you got it. So that's
by the way, you guys were talking about Meta, Microsoft, Amazon, etc. The junk part of the market is ripping.
That's where you make
rallying.
The maximum money.
That's what I'm saying.
Like there's a company called Cloudflare. I mean, the 30% of the world's internet passes through Cloudflare. It's doubled.
Yeah.
यहाँ double करने के लिए तो 4 साल चाहिए.
Who remembers GameStop, Bath and Beyond?
AMC.
Those are the kind of, the worse off, the stocks are rallying more. And that is a classic sign of risk on, which is happening in the tech industry.
Because you don't assume bankruptcy.
Yeah.
That's why they were the worst companies. You assume bankruptcy, that made them worst. So when you don't assume bankruptcy, they go up the most.
Time for a short break, but do stay on. We'll continue to decode the week on Dalal Street on the other side.
Welcome back to Editors Roundtable. Recent data has suggested that the household sell-off has started. What does this mean for equities in the near term? Nimish is here with the details. Nimish.
We all know that Indian markets underperform Asia and US as well. We all know that the FIs have been net sellers in the Indian markets. But the big missing point is, what is the retail doing? And that's what my piece is all about. The retail, which is the smart investor, and they've been so much backing the Indian markets, they're actually like selling off. Now that's a worrying data, right? And historically, we've been proven that with interest rates going up, the retail flows into the equity market slow down. That's exactly what I'm looking at. So this is a number. Like India has underperformed Asia, US as well. Even if you look at the FI flows, the FIs have been net sellers in the Indian markets, 42,000 crores since the beginning of January. Well, the DIs have bought 36,000 crore. But the bigger question is what does the retail money do? And the retail money seems to be moving out or not putting so much into the equity market. So that's the story, right? Historically, we've seen that when interest rates goes up, retail money goes out of the mutual funds, and that's exactly what I'm trying to do. This is a UBS data that I've picked up from. So if you look at the charts that will explain you very nicely on how the retail money for the first time in September quarter has actually gone down. If you can just move the chart, yeah. So this actually shows that the retail money, the money into the mutual funds have actually dipped in the September ended quarter. It's never been the case for the last 2 years, and exactly now we have seen for the first time it's dipping down. Even if you look at the overall flows into the mutual funds, even that has peaked out from the highs of almost 1,200 billion rupees. Now it has come down to almost 600 billion rupees. So that's the equity inflows into the mutual funds. That shows that that's tapering off. The next would be even interesting data. This is a split between the SIP money and the non-SIP money. But the SIP money is still very sticky, and that's consistently been doing well. The bigger worry is the direct money that the retail money, retail investors put in. That non-SIP money is now slipping off. Like for the last 2 quarters now, we're seeing that the non-SIP money is now not directly coming into the market. What that technically means is the retail money, the so-called hardcore direct retail money is shying away from the equity markets, and that's going to be the big talking point for the Indian performance. Remember, for the last 2 years, the big outperformance of India was backed by the retail money, and that's slowing off now, the direct retail money, and that's what is going to be the big theme for the end of this year.
Okay, Nimesh, thank you very much for that. Basant, would you be a little worried? We've been talking about how debt is now competing for flows when it comes to household incomes. Data is also supporting it, and this is not a 1-month data, right? This is something we've seen for the last couple of months. FIs are selling. If the money from the domestic institutional investors, retail, the family offices also taper down, would it be a bit of a problem for the Indian market?
I think if we had to crack, this was the best week for us to actually crack. The Nifty could have hit a circuit down, and I'm not trying to frighten people off. If you've survived this, it's like you've survived the first over from Curtly Ambrose. So you got a leg spinner now coming on, and you can add Barbados on a first day on a green top. So you've survived this, means you can survive anything. It's like Agni Pariksha for the Indian markets, and we have passed through it like Mata Sita.
Basant, I just want to, at the beginning you said India will only join what the globe is doing once we resolve this issue.
Yeah, but we will wait.
But what do you mean by that? Like, what is resolution?
Resolution means whatever has to happen, happens. So if the stock, instead of jumping for 60% up and falling 40% down, it just stays where it is. I mean, we cannot take a projection of where it's going to stabilize, but I know and you know where it's going to stabilize. Whatever has to happen should happen, because I've realized in the market that there are times from where you can pull a game off. This group is slowly falling into that situation where if it doesn't happen next week, it might not happen very soon, because you don't let a situation get out of control like that. Like on the FPO day, I said it publicly, it was like, शाम को घर में शादी और दिन में 3 बजे लड़की नहीं है घर पे. Your FPO is not getting subscribed. They should have used all their money and got the FPO subscribed on the first day. If that didn't happen, it told you that there's something more to it than what you and me can see.
But Agni Pariksha pass kar diya, right? That's the bottom line from this week. But thank you very much, Basant, for joining in. This has been an intense week for all of us. Have a wonderful weekend. It's a wrap on this edition of Editors Roundtable.